Hey friends, Lucian here with the Bullish Bears team. Wanted to make this video on longing a put or what a long put is. And if you've been around or you understand about options, I'll make this very simple for you. A long put is the same exact thing as buying a put. So, good news, if you've been around for a while, you understand options. It's as simple as that. I can save you from watching the rest of this video. Buying a put is the same exact thing as a long put. Just welcome to the world of options, of having several different names for the same exact thing, right? So again, I'll stress it, make it very simple. Puts or buying a put is the same thing as longing a put or buying a long put, all right? So hopefully that helped you. So if you're new and you're wondering what calls and puts are or what options are in general, then feel free to watch the rest of this video. And I'll go more in depth on what calls and puts are, the differences of longing a call or longing a put versus, shorting a call or shorting a put, or selling a call and selling a put. But again, if you need more help, we have our options course on our website. Our website is below. It's bullishbears.com. Make sure you head over there and take our options course. It'll really kind of bring all this stuff together and make things easier. Again, there are a lot of different moving parts to options. So again, quick recap before I get into it. When you buy a call, it's the same as longing a call. When you buy a put, it's the same as longing a put. All right? So, what are calls and puts? Calls or buying a call means that you believe that the price of the stock is going to rise. Same thing as longing, right? So if you're longing a stock, means you believe that it's going to go up. When you're buying a call or longing a call, means you believe that the price of the stock is going to rise. Now, if you buy a put or long a put, you believe that the price of the stock is going to go down. It's kind of like the concept of shorting with shares of a stock. So, with buying a stock, you can either buy it or you can either short it, right? So, if you're not trading options, you can either just buy shares of a stock or short shares of a stock, which means, again, you believe that the price is going to fall. So, you would borrow shares from your broker. So let's say let's say you shorted 100 shares of Procter and Gamble to your broker, so you'd be negative 100 shares. So you ideally short or sell high and then buy it back at a lower price. So instead of being negative 100 shares, you go back to zero. So ideally you sell at, let's say, 96 and then you buy it back at 92 and keep the difference. Same kind of concept with buying a put or longing a put. You believe that the stock's going down, so you want to sell at a higher strike price and buy low to cover and then keep the difference. So now I'm going to show you an options chain and the positives and the negatives of buying versus selling options and how to place a long put trade. So if you look over here, I'm using TD Ameritrade's Thinkorswim platform. We're huge fans. You'll see them in my simulated or virtual account. Just kind of show you how to make a test trade here. And again, highly recommend Thinkorswim platform. Really great virtual platform to practice, especially if you're new to the world of options. Really great platform to use with practicing trading options. So, calls and puts. Calls are on the left side of the options chain. Right side of the options chain, you'll see puts. The shaded purple areas are in the money. The black shaded areas are out of the money. You'll see I have probability of in the money on my chart. What that basically means is when the option expires, what's the probability of you being in profit or in the money? And you'll see percentages right here. In the money, the deeper that you go, the higher chance of that option expiring in your favor, and hence why you pay a bigger premium. So you'll see the prices over here under bid and ask. This is the premium that you will pay as an options buyer. So you're paying this amount to an options seller. So the seller collects these premiums, you're buying them. You're buying for the right, but not the obligation to purchase an option, at a lower price, in a future expiration date. So for the ability to do that, you're paying a premium to somebody else who then they have the obligation to sell to you, right? I'm not going to go too into depth of that because again, take our options course, we really explain it. So if you're an options buyer, you're paying the premium to a seller. And now here's some of the benefits and the positives and the negatives with an options, being an options buyer over being an options seller. Number one, you have kind of a undefined or unlimited profit potential because the stock could go up to infinity, right? So you can buy, for the right to, let's say, buy a Procter & Gamble, let's say at $97. Procter & Gamble could go up to $500. It can go up to $1,000. Nobody knows. So it can be undefined or unlimited profit potential, right? Now, Procter & Gamble cannot fall below the price of zero. So the good news is a stock can't go below zero. So when you're purchasing at this premium that you see here, you can never lose below your premium price that you pay being an options buyer. So you have very limited risk in the sense that you know the most that you can lose. So unlimited profit potential and defined risk. Now, the negative being an options buyer is most options contracts expire worthless. So the odds of a contract expiring in your favor being an options buyer are more limited unless you're buying in the money, deep in the money, and you know support and resistance really well. Again, we're not saying not to be options buyers. Again, there's positives and negatives to both. We day trade options, and many times we'll buy straight calls, or otherwise known as naked calls, and buy and sell these options contracts for profit. And we'll just, buy and sell naked call options. So we're doing that more on shorter term strategies because, again, the odds are not in our favor that options contract's going to expire in the money at expiration. Because again, options are decaying assets, right? Time value goes against you the more you're holding that options contract, and anything can happen in the market. Now, if you're an options seller, you're collecting these premium amounts over here. Now, as far as profit potential, you can only make the amount that you see here as an options seller. And so you can look at that as a positive or a negative, and a negative meaning your profit potential is capped. But sometimes people look at that as a positive of hey, I know what I can make, right? So you can look at that either way, but you don't have as much profit potential being an option seller. Your profit's capped. Now, the odds are more in your favor. So when you sell and you start selling out of the money contracts to somebody else, the odds are more in your favor. So you would take the inverse of this. So if somebody has a 25 or 28% chance of expiring in the money as an option buyer, that means you have a 70 plus chance of having that option decay and go worthless in collecting this premium. So the odds are more in your favor as an option seller. Now, there is a lot more undefined risk because, Procter & Gamble could go up to, let's say, $500, or whatever undefined amount. So that being the case, your risk is going to be a lot more just being a naked naked option seller by itself with not being in a spread. So there's positives and negatives to both being an options buyer and an options seller. Again, we go over lots of the different strategies in our options course on how to trade spreads and all of that good stuff. So let me show you how to place a trade for a long put, otherwise known as just buying a put. So if you want to buy a put or long a put, which is kind of weird when you say long a put because you're going, you're taking the short side of things, not the long side of things, but again, welcome to the world of options of making things confusing. So all you would do is go over to the put side, this right side over here, and you would basically right click if you're on a mouse, and you would buy a single put, right? So you'll see here, you're buying a put or longing a put, and you would basically confirm and send, and then this shows you again your max profit. Now some of them do have, sometimes it'll say undefined or infinite, and then sometimes you'll see a pretty big dollar amount, right? And you'll see, but your max loss is $116. So again, you know what your loss and your max loss is going to be. Always confirm your trade. Make sure you're doing properly what you want to do. Again, this is just my virtual account. I don't care about profit or loss making this video. So I'm going to press send, and you'll see my order will fill a lot quickly, or really quickly, being in a virtual account. So now what I'm going to do is go over to the monitor tab. You'll see my trade is placed on here. You'll see I made a bunch of videos that we're doing, a whole bunch of options videos adding into our courses here. So you'll see down here some of the practice trades I was just kind of doing to, showing how to get in and out of positions. And you'll see my Pfizer one right here. If you expand it, you'll see actually Procter & Gamble, not Pfizer. Procter & Gamble. There you go. You'll see +1 because I longed it. So being a long, it's +1. Being a short, you're -1. So you'll see +1 contract. Here it is over here. And all you need to do to close out this trade is right click if you're using a mouse, create closing order, sell, and now you'll see it went from buy to sell. You'll see -1 because I was at +1, so +1 -1 is going to put me at 0 and cancel out the position. Make sure you confirm your order box here and then press send. And now I will be out of my long put position, and you'll see down to 0. So again, the world of options has many different names to doing something that's essentially the same thing. So there's buying a call or longing a call, or buying a put or longing a put. So again, hopefully this helped to clear things up if you had any confusion or wondering what that means. So if you need more help, make sure to take our options course. The link is below. And again, as always, if you like this video, we greatly appreciate it. If you like it, share it, subscribe to our YouTube channel, and post any comments below. And we'll do our best to get back to you as soon as possible with answering your questions. So hopefully this video helped you, and we will see you in our community. Enjoy.